Good morning. Today is Monday, February 27. The time right now in Singapore is 10:06 in the morning. Let's do a little bit of recap relative to last Friday's action on Wall Street. We can find that on Wall Street last Friday, we saw one of the deepest sell-off in equity markets for this year. So much so that in the Dow Jones itself, we can see the market now is trading at the year's low at 32,642, which is the Dow Jones lowest point on Friday, although it did somewhat rebound towards the closing, but the market now is tracing out a three-wave pullback from the high of 34,712, and this may actually cause the market to come down a little bit more. The ideal target is at 32,203. So let's see whether the market will go there. And once the market hits there, there is that possibility the market may rebound. So do watch out for a rebound as the market nears the 32,200 levels. Okay, look for buying signal because the entire move here, or rather the entire move down from the high, looks a little bit corrective in nature from the daily time frame. Okay, over in the S&P 500, we are also seeing something quite similar. Let's take a look at the monthly time frame. We can see that as far as the monthly time frame is concerned, unlike Dow Jones, it has not taken out the January low. January low is still trading at 3,794. So if that is the case, when we look at the weekly time frame, we can see that last week drop was actually quite severe, because when you look at how the market trade off below the nearby support line, it has actually taken a major hit. But by and large, you can see that S&P 500 three-wave rebound does not look very complete to me. So there is that risk that the market may do an internal three-wave rally to test the 4,367 eventually. So would that be a possibility? I think the possibility remains very, very real, because so far in the daily time frame, we can find that this pullback here is also a three-wave pullback, and it has hit the 1.618 of this initial pullback here. So if this is the case, what we may see going forward this week, especially tonight, is that market may actually rebound a little bit, and whether it can sustain the rebound will tell us very much about what it's going to do in the next leg of this move. Because if the market traces out a 5-wave down, then it could mean something more sinister. Okay, but however, if the market managed to rebound from where it is right now, then it obviously would enhance the idea that the market is just doing a technical pullback and there's nothing to worry about. The idea of a market eventually testing the 4,367 remains a possibility. Okay, so again, the next move will be very much dependent on how the market unfolds in the coming days. Over in the Nasdaq 100, we can find the Nasdaq is definitely nowhere near the January low. The January low is somewhere okay, January low is way over here. Okay, so we can see the January low is very far away from where the last Friday low was. So unlike the Dow Jones, it has not been trading at a year low. It is very much in line with the S&P 500 structure. We have a three-wave pullback from a high of 12,881 to a low of 11,900. And incidentally, if you look at a 4 hours time frame, the 11,900 seems to be the a technical chart point here, because previously on January 23rd, this was the low, and the market tested this low and managed to hold up. So again, so far it's tracing out a three-wave pullback. There's every possibility the market may rebound at least in the near term, probably tonight. Again, if the market can actually rebound, let's see whether it can, how far it will go. Okay, if it's not able to go beyond this point, I think this point here may actually play a rather crucial role here. Okay, at 12,204, if the market goes and overlaps, means it's trade above 12,204, then the risk of a 5-wave pattern unfolding will be more or less reduced. Okay, but if the market should trade above 12,204, that means we can basically eliminate the possibility of a 5-wave down. The possibility that the market has already bottomed up at 11,900 become very strong in the market can go up above 12,204, because the rule of Elliott wave is that the wave 1 cannot be exceeded in any kind of move. So if this is wave 1, wave 2, wave 3, that means wave 3 is still in the midst of unfolding. This could lead to a very severe fall in equity prices. And if this extends all the way to 11,600, then that means the 5-wave scenario becomes more prevalent, and we run the risk of a market actually going down all the way to take out last year's low. So this is something very crucial. How the market unfolds in the coming days and weeks will tell us exactly if the US equity market has already peaked at 11,881 in the Nasdaq 100. When we look at Asia, as far as Hang Seng is concerned, Hang Seng is basically in a downtrend. When we look at Hang Seng from the weekly time frame, you can see that the entire weekly time frame is telling us this market is bearish, and the rebound from 14,600 thereabout all the way to 22,700 may have already peaked, because at this level here we can find that back in August, this was the high, and the market did a marginal high, couldn't find any buy stops, and then continued to reverse, and that has been the case for the last 4 weeks. You can see that Hang Seng has been falling practically for the last 4 weeks, especially in for the whole of February. So that tells us a lot that this key area 22,700 may be the peak for this run. Okay, so going forward, as far as the Hang Seng is concerned, any rebound ought to be sold, because the structure is very different from what we are seeing in the US equity market. Okay, over in the Shanghai Composite Index, we can see that the market is basically quite bullish. From the low of 2,885, the market has gone up so far to 3,310, and that has become somehow a resistant level, because previously we can see there are many attempts to go beyond the 3,310, and they have all failed, and that led to disappointment, in which the market pulls back. And this morning when the market opened, it sits on the support line and then rebound. So basically, I think the market may still have a chance to actually tackle the 3,310 level, and if that's the case, I think the immediate target will be 3,375 to the upside. Okay, so the structure in the Shanghai Composite Index is very different from the Hang Seng Index, because I think mainland stocks now, because of the reopening of mainland China, I think the sentiment has changed somewhat to the positive side. Of course, assuming there's no other external shock, and then that would be the scenario for the Chinese equity markets. Over in the Shanghai Composite, in the Nikkei 225, we can see that the market has been very lethargic. The pullback from 27,821 is also unfolding in a three-wave pattern, supported by the support line at 27,046, and this was actually traded last Wednesday, and so far the market has been sitting on this. Then the market has actually experienced a bit of a rebound on Friday, because the incoming governor of Bank of Japan actually gave a speech, and he gave us the idea that he's likely to maintain the ultra easy monetary policy set by the current governor, which is a guy called Kuroda, and Kuroda is stepping down on April the 8th, and this new guy called Ueda is likely to maintain the same policy as Kuroda, and that led the market higher, because lower, if there's no risk of a hike in interest rates, that's definitely a positive for equity market. But over the longer term, the reason why they are going to maintain the ultra easy monetary policy, because the Bank of Japan is practically trapped. They cannot afford higher interest rate, because that will blow up the national debt. They cannot afford the lower interest rate, because capital will flow out of Japan. So right now they are between a rock and a hard place. They really have no longer any initiative to they just basically have to hope for the best. But if the Fed continue to high interest rate, I think it's going to blow the lead further. Okay, so I think Japan is definitely not in a very comfortable place right now, and if that's the case, I think the downside risk is very, very high. So try not to avoid to go long on Japanese equities. Despite the current technical outlook seems to favor the buy side, I'm not going to buy this market anytime soon. Okay, in fact, if there's a chance for me to sell, I will likely to sell this market, because this market right now is artificially being held by the ultra easy monetary policy adopted by the Bank of Japan. Okay, and when we look at currency market, we can see that the dollar strength is becoming very, very evident. Friday we see another kick up in the dollar itself, and largely it was due to the release of the personal consumption expenditure data, which shows that the US consumers are still buying, and it does seem that inflation is creeping back up again. So that lead to the idea that the Federal Reserve, during the next FOMC meeting, which is going to be due next month, is going to raise interest rate possibly by 50 basis points. And this is a remarkable reversal in sentiment, because going into last week, the market actually dismissed the idea that the Federal Reserve will hike interest rate anywhere near 0.5%. 0.25 was what the market expected, but within the week, immediately after the PCE numbers were released on Friday, the market sentiment shift dramatically. Now market expecting a 30% chance that the Fed may actually hike interest rate by 50 basis points next month. That caused the dollar to go up. So the higher traded this morning is 136.55. My target for this one is at 139. So 139 remains my target for this move here. Okay. Over in the euro versus the dollar, we can see the dollar strength is affecting all other major currencies, leading them to continue to decline. And right now, where we are right now in the euro dollar is actually quite crucial. If the market continues to go below 1.048, okay, then the market runs the risk of actually collapsing, because right now it's a three-way pullback. It is still allowable for the market to rebound, okay? But if the market accelerates below 1.048, the market run the risk of actually taking out 102 altogether and basically cause the entire rally from 0.95 to collapse. Okay, this is a very real possibility because the economic numbers coming up from Europe is dire. We can still see that although inflation has been more or less coming down, but it's still relatively high. And we can see manufacturing is actually shrinking. So the whole of Europe, especially as Germany is concerned, we can see manufacturing PMI is showing that it is still in contraction territory. So that is actually very negative for the currency. So actually, I'm long-term very, very negative on the euro dollar. So if the chance appears, if market get a rebound, I'm likely to want to sell this currency pair. Okay, over in the Aussie, I'm basically already short, but the market has a pullback and yes, hit equality point. The pullback from 0.715 had hit a equality point at 0.6718, thereabout. This is my target. My target was at 0.6727. So it has practically hit my target. And now the interesting thing here is, are we going to be able to see a rebound from last Friday low? If we can get, then the market have a chance to actually accelerate again to the upside. But that will be dependent on the dollar rate. The dollar right now is very, very strong. So that is a counter force against the Aussie dollars rising. So the odds of Aussie continuing to slide is actually pretty high, especially when we look at how gold prices has actually come off quite aggressively on Friday. And that is actually a negative for Aussie dollars, because Aussie dollars has always been correlated to the gold price. And if gold price goes down goes the Aussie dollars as well. So based on this alone, the technical factor aside, the sentiment seems to be favoring further losses in the Aussie market. So we will have to see. The market take out 0.6580, then the market would have already turned into a bearish mode. Okay. Over in the sterling, the drop on Friday so far is not as severe as what we see in the euro dollar. So the fall so far has been very, very controlled. In fact, the low was actually traded 2 weeks ago at 1.1841. Okay, this week itself we have no new. Last week we do have no new low. So on a relative basis, the sterling is very well supported for now. But basically, the market is in a bear trend. You can see the larger box is actually pink in color. So the market is actually in the bear market. Over in the dollar versus Canadian, we can see that the dollar continue to also rise versus the Canadian dollars, and there's every possibility the market has actually extended more than 1.618%, and it may actually go out and take out the 1.3705 high, which was last traded in December of last year. So this is a three-wave rally. Market may ideally want to hit 1.3740, and that will be my immediate target. But I currently have no long position in dollar versus Canadian. I'm already short the Aussie. I'm hoping that I can get some more exposure in other currency pairs. Over in energy market, you can see the crude oil prices actually went down on Thursday to hit a low at $73.80, I believe. Okay, let's see whether $73.82. This is 4 hours time frame. You can see the market is 80 cents. $73.80 was the low, and then followed by a relatively sharp rebound. Although there was a sharp pullback, but it was immediately cancelled by another rebound attempt. So far, so much so that on Friday it actually closed on a positive note. Okay, so it's marginally positive on the weekly time frame. That means there is a reversal somewhat. Okay, that's in place. Okay, sorry about this. You can see the market has actually have a reversal. This is likely to be a long tail. So that means from this area here, these are basically demand. Okay, so if this is the case, I think going along the energy markets, especially crude oil, is actually something that can be considered. Okay, so by now I do I still have long position? Yeah, I still have long position in crude oil. Okay, my long position was carried forward for a while ago, and I'm still holding on to those crude oil position. And the one I want to highlight is actually this one. This is natural gas. Natural gas has been under attack for a very, very long time. The market has actually been falling since, let me see, August of last year, and from above $10, it has fallen below $2, and that was an 80% drop in prices. And the rebound from here, technically speaking, is very, very robust. So the market actually traded to a high this morning of $2.67. So this is laying the groundwork for a buy. Okay, if the market do retrace, and we will have to pick the retracement level. If the market do retrace, I think we'll be calling for a long, putting the stop just below the most recent low last week. Okay, so this is a good trade, because if the market has actually declined by 80%, the upside potential is huge. When we look at the daily time frame, for example, this market, no, not even a daily, let's take at the weekly. Okay, the weekly time frame will tell us that this market has a lot of upside potential. From $10, it dropped to below $2. If the market can retrace 50%, it is at $6. From where we are right now, okay, $6, is it an impossible task? I do not think so. Let's say if we are even more conservative, let's say we don't take 50%, we take 38.2%, okay? Or let's say even 23.6%. It is still very good, because from where we are right now, the minimum target is $3.87. Okay, so there's still quite a bit of meat left. If you want to go in and do a counter trend trade, I think it is quite viable. Okay, so especially if we can buy at a very, very good price upon any kind of retracements and upon the appearance of a buy signal after the retracement. So you can see that this is the immediate target, $3.86. Okay, so even if on the chart point, do we have resistance around the area? Yes, we do have. The first most visible target will be at the bare minimum $3.60. So if you use this as a target, there's a lot of room upstairs. Okay, so if the market pulls back at least 50% or so, then it gives us a buy signal. I'm more than happy to take a chance to go and buy it and to gun for at the bare minimum $3.60. Okay, and this is actually quite a good setup here. Okay, over in gold market, we continue to see gold prices continue to slide. This is on the back of a resurgent dollar. So any kind of dollar strength is definitely bad for commodity prices, and we are seeing that play out in the gold market. Gold prices went up to a low of $1,808.50 on Friday and managed to hold. Now, when we look in the daily time frame, why the market held out at $1,800 is actually based on this higher that we saw in August previously, 1,807.9, which is almost $1,808. You can see the market actually came in and respect this peak here. Okay, this is a pivot point, and this is based on the chart point itself. So there's no other fundamental reason why it must hold at $1,800. It's purely a technical consideration, and if the market do not decay anymore below this point here, there's a possibility the market may do a rebound. But I think by and large, the down move that we saw in gold prices is possibly not over yet. We may see further losses in the weeks ahead, and my idea is that this gold market may actually continue to slide all the way to somewhere towards the end of April or the beginning of May. So we have about right now 2 more months for the market to play this out. So 2 months is a long time in trading. So if you hope that the market can hold up and rebound by April, then you want to stay short this market if there's a possibility of doing so. So right now, I'm just hoping the market can actually do a rebound, a simple rebound to $1,870 to $890. Between this $20 range, I think somewhere between this bracket of prices, if we get a reversal signal, I'm more than happy to go short and take my chances for a continuation of the slide going into end of April. Okay, over in silver is the same story. Friday we see a more pronounced decline in silver prices relative to gold, but it's again very near the immediate chart point here at $20.58. The market so far, the low is at $20.73. We will see whether this level here at $20.58 can actually hold this market. But by and large, silver is a long-term buy. Okay, so the entire box here is green in color, so I'm more than happy to look for buying opportunity here. Okay. Over in Bitcoin, we can see Bitcoin prices managed to rally on Friday. I mean, on Sunday itself. This is actually quite remarkable because in the face of a in a severe sell-off in US equity, Bitcoin has been very resilient. The market actually rebound on Sunday, and now the market is trading above the $27,000. Okay, over the weekend on Sunday, we see there's a brief breach below 23,000, and it was quickly bought up, and now we are trading at $23,560 there about. So I've actually gone long, okay, on Bitcoin near the 22,700 dollars range. Okay, so I'm hoping that this can actually see the market challenge the 25,252 over time. Okay, over in Ethereum, we also see a very technically a strong recovery. Market momentarily broke the 1,006 levels, also recovered on Sunday, and now it has taken out a near-term resistance line, and this is actually going to be technically viable for the market to continue to edge higher, possibly to challenge the 1,743. Okay, over in Cardano, we are not seeing the same kind of bullishness that we saw in Bitcoin and Ethereum. Basically, the market has actually pulled back very, very deep below the 88.6% retracement. So this is definitely showing us the market is very, very weak on a technical basis, and it has yet to take out the nearby resistance level. So on a relative basis, this token here is definitely not where you want to be buying yet. Okay, and over in Solana, with the same thing, the market has pulled back not as deep as Cardano, but is pulling back at 78.6%, also relatively weak, but it is near a chart point. Market did take out a near-term resistance. So on a relative basis, Cardano right now is the weakest link, and we will have to see how the market plays out. Okay, this week we're going to have a lot of major data, so keep your eyes peeled, okay, as the market is likely to be more volatile this week. In the meantime, this is all I have for you. I will keep you updated the same time tomorrow. Bye-bye.